A product passes through three processes: process A, process B, process C. 4,19,700 divided by 1,425 to 7,363. Then your output is 1,050. Abnormal loss of 24 as per working note. The value is 19,795. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Cost Accounting, third semester, Unit 1, Session 2 of BCom in favor of process costing. In the last session, I have explained what is cost sheet, what are the methods of cost sheet. A problem has been solved. In the same, what's called Unit 1, we go with the called process costing. I'm going to explain what is process costing, how to solve the problem. Agenda here, problems and solution on process costing I'm going to do now in this session. So this is a problem. A product passes through three processes: process A, process B, process C. So these are the expenditure of process A, expenditure of process C, B, expenditure of process C. Here, 1,500 raw materials were issued to process A at rupees 60 per unit. Prepare the process account. Now, I am going to explain what is actually mean process account. We'll start with, assume that we put the raw materials. Assume that there are three processes: process A, process B, process C. Assume that you put the raw materials here. It is an input now. In this process, all the expenditure will made, will get the output at the end of the year. This is your output. The output of process A becomes the input of process B. Then we'll get the output here. The output of process B becomes the input of process C, where we get the final product. This is the procedure. How it will be? You put the raw material in the process A, will make the expenditure, will get the output. The output of process A becomes the input for process B. The input of process, then we'll get the output here. The output of B becomes the input for process C, where we get the final product. So, in order to get the final product, it has to go through the process A, process B, and process C. This is the procedure you have to follow. All the expenditure you have to put it here. Then total expenses, then input, there is normal loss, abnormal loss, I will explain. So, if you put the input here, we'll get the output here. The output becomes the input here. Then once again, it becomes the output here. The output of process B becomes the input for process C, where you get the final product. Then, there are two types of losses. One is called normal loss. So there are two types of loss. One is called normal loss, another is called abnormal loss. What is normal loss? Means due to leakage, evaporation. Is a regular loss which cannot be avoided. So how it will happen? Due to leakage, due to evaporation, it is called normal loss which cannot be avoided. Then there is called abnormal loss. This can be happen due to accident, theft, fire, etc. So, which can be calculated. Abnormal loss can be calculated, whereas normal loss cannot be calculated. It's a regular loss. It is abnormal loss. It may happen due to accident, due to fire, due to theft, etc. Then, how to find out abnormal loss? Go. Working note number 1. Particular units. Total input. Whatever the raw material you can put, minus normal loss that should be deducted. Whatever the answer comes, which is called in costing normal output or standard output. Normal output. How it will be? Total input minus normal loss, it is called normal output. This output to be taken out minus actual output the difference is called abnormal loss or abnormal gain. How it will be? Total input minus normal loss, it is called normal output. Assume that 1000 units have been introduced. 10% is the normal loss, means 100. And an example, a small example, how much raw material put? 1000. How much normal loss? 10%, 100. So your normal output is, we require 900. By chance, your actual output is 850. The 50 is called abnormal loss. By chance, if the actual output is 950, 50 is called abnormal gain. More than this, gain. Less than this, abnormal loss. So this is the standard. Less than standard, it is called abnormal loss. More than standard, it is called abnormal gain. This is the way you have to do it. Total expenses minus scrap value deduct, it is called normal cost. So first you have to do this one, then we have to do this total expense of process A or B minus scrap value realized is called normal cost. Then working note number 3, value of abnormal loss or gain. Value of abnormal loss or gain formula, normal cost divided by normal output multiplied by abnormal loss or abnormal gain. How it will be? First one, total input minus normal loss, normal output minus actual output. This is your standard. Less than standard, abnormal loss. More than standard, abnormal gain. Then you have to go to working note number 2. Total expenses minus scrap value is called normal cost. Working note number 3. Value of abnormal loss or gain. Normal cost divided by normal output multiplied by abnormal loss or abnormal gain units. What is the formula? Normal cost divided by normal output multiplied by abnormal loss or abnormal gain units. So this way you have to work out the problem. So we'll go with the problem now. This is your process A. particular units value. Particulars units value. Write it here. You write here input. Go with the problem. What's your input? How many units introduced? 1500. What's your output? Here, actual output 1400. Output 1400 units. This way you have to write. First, you have to put input 1500 units, particular units value. The output of this process is 1400 particular units value. Now you have to fill back this one. We'll go with one. How much raw material introduced? 1500 at what rate? At rupees 60 per unit. To input raw materials, how many units? 1500 units at rupees 60. So 1500 units into rupees 60, 90,000 value. Now you have to put the expenditure of process A. What is materials? 40,000 to materials value 40,000. What next? You see that wages to wages 2,20,000. Then after this over, what is next one? Work expenses. Work expenses what's your work expenses? Comes to 60,000. Then other expenses, it comes to other expenses 10,000. These are all the expenditure. So you put how many units introduced? 1500. At what rate? 60 become 90,000. Material cost 40,000. Wages 2,20,000. Work expense 60,000. Other expenses 10,000. Come back. What's the normal loss? Normal loss is 5% by normal loss. This is 5% on 1500 units. 1500 into 5 by 100. 1500 into 5 divided by 100 is equal to 75 units loss. Per unit, how much it has been sold? Normal loss 5%. It has been sold at rupees 4. So it is 75 into 4. This is 75 into rupees 4. 75 into 4. 300. Now, close this. working note number 1, particulars, units. Total input 1500 units. We put how many units? 1500 units. What's your normal loss? 75 minus normal loss 75 units. Deduct, this is 5, this is 2, this is 4, this is 1. Normal output, this is your standard output. What is your actual output? Is 1400 minus actual output 1400. There is a shortage of 25, which is called abnormal loss. So, what's your total input? 1500 units. What's your normal loss? 75. What's your normal output? 1425. What's your actual output? 1400. There was an abnormal loss of 25 units. This is working note number 1. Working note number 2, particulars, amount. Total expenses of process A. You have to add amount R 90,000 plus 40,000 plus 2,20,000 followed by 30, 2,20,000 plus 60,000, 60 followed by 30 plus 10,000, 10 followed by 30, 4,20,000. Then this is 1,500 units. Here 1,500, 4,20,000. What is the total amount? 4,20,000. See that? 0, 0, 9 plus 4, 13, 15, 21, 22, 2 plus 2, 4. So, minus, what is amount realized? 300 minus scrap realized. Scrap realized. How much money? 300. Deduct 0, 0, 7, 9, 1, 4. 4,19,700. It is called normal cost. Working note number 3. Value of abnormal loss. Formula: normal cost divided by normal output multiplied by abnormal loss units. What's your normal cost? 4,19,700 divided by normal output 1425. Your loss is 25. Find out the value. 4,19,700 divided by 1425 into 25. 7363. I will repeat. 419,700 divided by 1425 multiplied by 25 units, 7363.15. So we can take 7363. This is the value of how many units? 25 units. Abnormal loss. (25 units). Value 7363. 7363. So bring out the difference. 75, 25, 100, 1400 units. Value 4,20,000 followed by 30 minus 300 minus 7363. 4,12,337. This is the output of process A. Transfer to process B. Transfer to process B. I will explain. You put the input 1,500 at rupees 60 become 90,000 is an expenditure. Material value 40, wages value 2,20,000, work expense 60,000, other expense 10,000. So total expenditure comes 4,20,000. How many units? 1,500. How many normal loss? 5%. 5% of 1,500 is 75. At what rate? At rupees 4 rupees realized 300. Then according to working note, 1,500 minus normal loss is 75, balance is 1,425. What's your actual output? 1,400. 25 is the abnormal loss unit. The total expenditure is 4,20,000. How much scrap realized? 300. Your normal cost become 4,19,700. Value of abnormal loss, normal cost divided by normal output multiplied by abnormal loss unit. 4,19,700 divided by 1,425 to 25 work out 7,363. So this whatever the result comes, this is the output. Transfer to process B. So 1,500 become 1,400. The value is 4,12,337. Then we'll go to process B now. Process B. Same procedure. Units, value, particulars, units, value, draw this. Now, your input 1,400 units. The output of process A becomes for input for process B. What's your output now? Here, 1,300 output. 1,300 units. Now, come back here. To process A, transfer entry. How many units? 1,400. What's the value? 4,12,337. 4,12,337. Transfer entry from process A. Now, you have to put the expenditure of process B. Come back here. Materials how much? 24,000 to materials 24,000. Then what's the next expenditure? Wages to wages 2,40,000. Wages. What is the next expenditure? Then work expenses. Work expenses. Work expenses work out. Work expense become 80,000. Other expenses. Other expenses 12,000. 12,000. And all the expenditure. So this is a transfer entry. Material cost 24,000, wages cost 2,40,000, work expense 80,000, other expenses 12,000. What's the normal loss we look after? Percentage. It is 10% by normal loss. 10% on 1,400 units. 1,400 into 10 divided by 100. 140 units. At what value it is going to be realized? Per unit how much? 10 rupees. 140 into rupees 10. 14 ones are 14. Followed by 20. 140 into 10. 1,400. 140 ones are 140 followed by 0. Now, close this here. Come back to working note. Working note, same working note number 1. Particular units. Total input. How many units now? 1,400 minus normal loss 140 units. See that? 140 units. Deduct normal output minus actual output see that what's your actual output? 1,300 units. It is 1,300 units minus 1,260. 40 unit excess is there. It is called abnormal gain. This is your standard is 1,260. What is actual? 1,300. How much more? 40. It is called abnormal gain. Working note number 2. Particulars amount total expenses of the 12,337 plus 24,000 plus 2,40,000 followed by 30 plus 80,080 followed by 30 plus 12,000 followed by 30 is equal to 7,68,337. 68,337 minus scrap realized. What's the value realized? 1,400. Deduct 7,3,9,667. $7,66,937. Normal cost. Then value, working note number 3, value of abnormal gain. Value of abnormal gain, normal cost divided by normal output multiplied by abnormal gain units. What's your normal cost? 7,66,937 divided by normal output 1,260 into 40. So we'll work out 7,66,937 divided by 1,260 into 40, 24,347. I will strike 7,66,937 divided by 1,260 multiplied by 40 units, 24,347. 24,347. 40 units. To abnormal gain. How many units? 40 units. Value 24,347. 24,347. Now find out the value. This is 4,12,337 plus 24,000 plus 2,40,000 followed by 30 plus 80,000 plus 12,000 plus 24,347 7,92,684. It is 1,440. Put it here. 1,440 value 7,92,684. Out of that minus 1,400 will go. 7,91,284 units. 0, 0, 1,000. Transfer to process C. Transfer entry. So whatever the difference come, the output of process B transfer to process C. Last one. process C account. Same procedure. Particular units value, particulars units value, now input, the output of process B becomes input now, 1300 units. Then your output now, as per the problem, your output is 1250 units. Now, transfer entry. So your input is 1300 units, your output is 1250 units. To process B, transfer entry, how many units? 1300 units. What's the value? 7,91,284. 7,91,284. Expenditure of this process to materials. What's the value? Materials. It comes to 16,000. Then what is next one? Material. Then wages, 2 lakh. To wages, 2 lakh. Let's go over. What is next one? Work expenses, 40,000. Work expenses, $40,000. Then other expenses, 4,000. Other expenses, 4,000. By normal laws, what is the percentage? Normal laws, 2%. 2% on 1,300 units. So 1,300 into 2 divided by 100, 26 units. Per unit, what's your cost? Per unit, 12 rupees, 312, 26 into, what's your per unit? 312. Close this. Same working note now. Go to working note. Working note number 1. Working note number 1. Particular units. Total input. Total input How many units? 1300 minus normal loss. How many units? 26. Deduct normal output minus actual output. This is your standard 1274. What's your actual output? 1250. So there is a difference of 24 less. Your standard is 1274, but your actual is 1250. So there is a difference of 24, which is called abnormal loss. Now, working note number 2, particulars, amount, total expenses, 7,91,284 plus 16,000 plus 2 lakh, 2 followed by 50 plus 40,000, 40 followed by 30, 40,000 plus 4,000 is equal to 105, 10 lakh, 51,284, 10 lakh, 51,284. This is 1,300 units, 1,300 units, 10 lakh, 51,284, 51,284 minus scrap realized. What's the value? 312. 10 lakh 51,284 minus 312. 10 lakh 50,972. This is called normal cost. Then working note number 3, value of abnormal loss. Formula, value of abnormal loss, normal cost divided by normal output multiplied by normal cost divided by normal output multiplied by abnormal loss units. What's your abnormal loss units? Abnormal loss units. Apply. What's your normal cost? 10 lakh 50,972. What's your normal output? 1274 multiplied by 24 units. 10,50,972 divided by 10,50,972 divided by 1274 into 24. 19,799. 19799. 1050972 divided by 1274 into 24. 1979, 17,798.5, 799. For how many units? 24. Abnormal loss How many units? Abnormal loss is 24 units. Value abnormal loss 24 units. Value 19,799. 19,799. So 10,51,000 2,000 value abnormal gain. So bring out the difference. 1,000 to 50 units. 1,000 to 50 units. 50 units. 10,51,284 minus 312 minus 19,799. 10,31,173. This is by finished product. So in the process C, we are going to get the finished product. Process B, 1,000 in value, material value, wages value, work expenses, other expense. Normal loss 2% on 1,000 becomes 26. It becomes 312. Then your output is 1,050. Abnormal loss of 24 as per working now. The value is 19,795. So here we have got the three process. The output of the process A become the input for process B. The output of process B become the input for process C, where you get the finished product of 1,250 unit. Valuing how much money? 10,31,173. Hope you understand. So we have got three process A, process B, process C. You put the raw material process A, will get the output. It will go to process B input. The output of process A become the input for process B. The output of process B become the input for process C, where you get the final product. So we have to go through three process in order to get the final product. The working note is compulsory and necessary. Total input minus normal loss minus actual output is abnormal loss or abnormal gain. Working note number 2, total expenditure minus scrap value realized, it is called normal cost. Value of abnormal loss, abnormal gain, normal cost divided by normal output multiplied by abnormal loss or abnormal gain. If it is abnormal gain, it will come to debit side of the ledger account. If there is abnormal loss, it will come on the credit side of the ledger account. Hope you understand. This type of problem definitely will come from the examination of point of view. In the next session, I'm going to have one more class on this procedure. Till then, goodbye. Meet in the next session.